Something big is happening in a bubbly housing market. Here is an article from fortune.com you guys are not going to want to miss. I will have a link to this article down in the description below. Now let's jump right in. Even before the lockdowns were eased, white-collar professionals who saw their jobs go remote were ditching their apartments in places like Seattle and New York for homes in markets like Austin, Boise, and Las Vegas. That rush of home buyer activity, of course, saw prices absolutely skyrocket in those markets. In Las Vegas alone, the pandemic housing boom pushed home prices up almost 50%. That's insane. But look at what's happening now. Look at that Austin inventory just spiked like crazy. Look at that. Now this was 2019 was average levels. So you can see that finally we're going back to those normal, year to year inventory levels that we did not see during coronavirus and during 2021. This is a great chart that shows why the prices jumped so high. Now, the only way to bring these prices down is we're going to have to see more inventory. Now, if we see above 8,000 right here in Austin, that will be insane, right? Because remember, everyone is anticipating a huge market crash. So when we start seeing these metros, these cities that jumped up so much during the pandemic because of that low supply that you see, you're going to see a huge change when it comes to, the new listings, just inventory just exploding, and we're gonna see prices really come down, which is great news for people who are been sitting on the sidelines in the Austin area and in Vegas and Boise, that basically got priced out of their neighborhoods. Now they're going to have a chance to jump back in. Now, I don't think it's gonna happen overnight, guys. I think it's definitely gonna be something that's gonna happen over the next 6 months, a year, 2 years to really find those cherry prices. But like for right now, this is just good signs that things are heading towards the right direction. Now, in many ways, it is going to be painful to see the stock market crash. Remember, there's a lot of, not just the stock market, but the housing market crash. Remember, there's a lot of people that bought in the last 2 years. They're gonna get burned because they bought at the peak. And when, there are gonna be anybody who bought this year is probably gonna be underwater by the end of the year. So that's something to look, into. I mean, are people going to walk away from their homes? Nobody likes to pay for something that when the neighbor is paying a lot less, right? Because if you overpaid for your house, you're paying more for property taxes, and you're paying, a bigger loan and bigger mortgage payments. So it does bother a lot of people knowing that if, the neighbor could buy a house and they're paying $1,000 less than you, for example, or more sometimes, because with the Fed rate hike going up as much as it has, I mean, if you were to buy the same house today that you could have bought a year ago, you would be paying about 60% more money for that mortgage. That's just with that interest rate going up 1%, 2%, 3%. So it's a big deal, guys. And it basically, at the end of the day, it does price a lot of people out of the market. Now, I want to show you these big jumps, right? If you look at back in the days, 17, 18, 19, the jumps were not that big. And you can see how it was very, predictable, right? Look at that, year after year, so predictable. And then we have coronavirus, which threw everything out of whack. But now look at this new, inventory jumps. These are huge spikes. Now, what is the next month gonna look like? Is it going to be above the average, the year-to-year average? We're going to have to see, but I'm guessing we are going to see a lot more houses on the market very soon. Again, we're still not back at those original inventory levels of previous years, but we're definitely heading in the right direction. So that's just something to really look at. Look at Boise right here. Now, Boise has definitely surpassed the average, right? Now this, you're gonna start seeing housing prices, by the end of summer, really come down in areas like Boise. If we go down here to Las Vegas, look at that jump, guys. Now, Las Vegas has always been like this up and down just because there's a big rush in Las Vegas, and you could really, a lot of the times, find great deals. But you can see how now things are starting to look a lot different for Las Vegas. We're starting to hit those high inventory levels, and you know what is that going to do to the housing prices in that town? Well, I could tell you it's definitely going to make them drop. Let's see if we get more inventory in the next report. I'm guessing we are going to, and that is basically the beginning of the cracks, right? Like of the crack of the bubble. Now look at this, Virginia Beach inventory remains below pre-pandemic levels. So not every single city is having these huge inventory levels. Remember, chances are in certain areas you're just not building a lot, you know, and there's not that much economic activity. So you could see why there has been a decline in this area. But right now you can see that a place like Virginia Beach is going to keep those highs fairly high, because it's all about supply and demand, guys. If the supply is down and there's a little bit higher demand, you can see that that's the trend that keeps the prices up. Now look, the trend here of less inventory has been happening now, since basically 17 has been on the way down. So that's just something to look at. The degree to which the original home prices are overvalued or undervalued according to Moody Analytics. So yeah, like they're saying that Virginia Beach is way overvalued, Las Vegas is way overvalued, Boston, Austin and Boise. And you can see by this chart, this is a clear indication of a crash. Look at these prices back during the 08 bubble. That was a clear indication. This was a huge crash. Look at Las Vegas, just went way under, in basically 1 year. So I don't know if we're gonna see a slide down like this. I think it's gonna be more gradual, because the problem that we're having right now is inflation. Inflation tends to keep everything high. So we need to first tackle inflation, which is gonna be the number one issue right now. Once we tackle inflation, then as we bring down the economy, it's not gonna be overnight. It's gonna take a year, 2-3 years, but it will basically shrink the economy, and in the process, it will shrink those new home prices, to levels that are gonna be a lot more affordable for the community. Now, hopefully the levels stay low for a while to give people more time to jump into the market, but we're gonna have to see how it all pans out. Again, it's a moving target, and we've never gone through a situation like this before. I know we had high inflation back in the 70s, but now it's a lot different, because the world is more connected now. We're more in a global economy, and I'm telling you guys, the rest of the world is going through a lot of problems, a lot of inflation around the world. Eventually that is going to come to the United States, and it's probably going to affect us pretty severe. So we're gonna have to see how it all pans out. But 2023 is looking like a very tough year for the economy. But, as far as housing is concerned, it's definitely most likely going to bring down those housing prices. Now, I'm gonna go ahead and finish this video. I wanna just say to everyone who's been watching my video and supporting my channel, thank you so much. It really does mean a lot to me. And if you're new to my channel and you like my videos, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.